to walk you through tax planning. And we made a phantom account and wanting to prove a point for you and let you see how the tax saving can happen and why tax planning need to plan. So let's look at our website, folks, communitycpa.com. You're looking at it. And on the website, you see how we are being recognized by Accounting Today for being the best firm for technology in United States of America. So we are one of the proud 10 firms that being mentioned by Accounting Today. And then on my right, you see that building. That's our new branch, Houston, Texas. That is coming along really well. We already start operating at Houston. So now let me go to the PowerPoint that I prepared for this meeting today. So it's called How We Do Tax Planning. How Community CPA does tax planning work for their client. Of course, it's not possible to really go into client private information to give you details, but then at least show you some sort of idea how we do that. Now, about our firm, I am so sure you know who we are because of you are here. And we like you to introduce our firm and our channel, our YouTube channel, Community CPA, to your friends and relatives. Let them know if they don't want to ask questions, engage in professional service, at least go on to our YouTube channel, study that, learning that on your own. And we are a 27 years old firm. We speak 10 plus languages in our firm. We have more than 12,000 clients. We have 5 branches in total, Houston, Texas being our newest one. It is already operating in Houston. And I myself, I am the CEO, managing partner for Community CPA. I served on the Federal Advisory Committee to IRS for 3 years. So these are my big point to brag about myself, right? I am author too. I wrote 2 books so far. The third book, 2 p.m., is still in the making. And it takes a lot to really write those books because I have to convince myself that I have really understood how to start up a business, how to grow a business. My third book is how to expand beyond yourself. So business owners, right? You start, you grow. At some point in time, you need to have a leap of faith, then go to another stage. That's what I'm writing right now. I hope Houston, Texas branch for our firm would serve as an example in that 2 p.m. book. Then my last book in the business series, it is a 6 p.m., which is retiring from your business. So much to write about, right? So I can't wait. I wish that I could just have a year doing nothing and just think about writing books. I would enjoy those years, not 365 days. All right, no responsibility disclaimer. Such an old school, right? But it is something we need to put out and to warn the readers that, you know, the information you want to take it with grain and salt, and don't just believe what internet says, right? And we have politician figures on internet lying about everything. So internet is full of lies. From time to time, you realize that yourself. But our firm, and we have a reputation to protect, and everything we put out, we did our best to bring you the most useful and correct information on our website. So let's get going. Why do we do tax planning? And do you have too much money to spend, so we want to charge you more? No. Tax planning is a lifestyle. I always tell my folks that just like when you spend money, you impulsively spending, or you actually budget your money knowing what you spend. Tax planning is the same thing. Are you impulsively paying IRS and the federal government, state government without preparation, or you like to know what amount you're gonna pay and how you're gonna pay, right? So it's a lifestyle, and our clients can't do planning because planning is too burdensome for them. But a lot of our clients are our tax planning clients, And tax planning, it is not just about we talk, you listen. It is we map, you review. So let's take a look at what we do. So here I wrote down tax planning. It's a great tool to value your current business. Yes, and you as a business owner, you always want to know how much your business is worth if you want to sell that tomorrow. So that is a great way to evaluate your business. It is also a way to prepare yourself before the year ending, right? And of course, save taxes. Save taxes legitimately and not, we're not those accountants going to go to jails for anybody. So everything needs to be done properly. We save taxes with certain measures and plan your structure, plan your tools. So this is what I will tell you what we do. So for example, we have Jim and Molly. This is our client, our fictitious client. They file taxes together. The married couple file taxes. They also have a partnership return they file, which is called the AAA LLC. Let's say their partnership return, AAA LLC, is actually, in this case, let's just say their real estate rental, they're doing rental, they're holding the properties, and they're also creating new properties. So it is just like as a big, huge AAA LLC. Now, and AAA LLC in 2024, so now is about time to do tax planning. So we're talking about 2024. Let's say AAA company in 2024 estimated net profit is $240,000. So if this is what Jim and Molly has, so the $240,000 will go to their personal tax return. They will end up paying $24,398 for income tax, right? Income tax rate goes from 0 to 37.5, so they're at 24% for that amount of income. Self-employment tax is also a big one. That's $34,018. So total federal taxes on their taxes would be $58,000. So this tax rate, 24%, it is higher than C corporation, which is at 21%. Am I right? So that's a fact. And your personal tax rate is higher, a lot of times is higher. You pay higher taxes on income tax than corporation paying income tax. So I just want to leave that in your mind. Of course, some people would argue that, double taxation. I always tell my client that if you still uttering the word of double taxation and the knowledge that you got on internet or the person you consulted to and making that a big deal for you, and the knowledge itself is probably 15 to 20 years outdated. And today's tax structure and tax laws are very flexible, and those kind of double taxation can be mitigated, can be resolved and planned. So self-employment tax from 1065 K1 is also too high. Of course, that's $34,018, right? So this is the story of Jim and Molly. So this is the tax map we give to our client. Normally, our map is we are in the center, which is your 1040. You see that map has two boxes, one on your left-hand side, the other one on your right-hand side. Right now, this right-hand side box is actually the middle one, is what we call the center. This is your 1040. A lot of your taxes are coming over here to get paid, right? So you see on your 1040, and on the left is your LLC. That one moves the result, file taxes, but move the result over to 1040. So everything is resolved on the big box on this paper. So you can see the taxes you are paying, $58,000 on the federal taxes and $8,000 some more on the state, right? So now, this is the end of the story. Jim and Molly didn't come to Community CPA. They're just filing their taxes with their TurboTax software and whatever they were doing. So that will be the result for them. Okay. Now, Common tax tool, common tax planning tools we have in our toolbox are the following, and we gave that to you. C corporation, 21% of tax rate, and it can also deploy that into a fiscal year, so that will give you a little bit time to plan your taxes. S corporation, reasonable compensation to save a self-employment tax, right? 401k, employee deferrals and employer match, that's our tool too. Cash balance plan, absolutely our tool. Purchase new equipment, vehicles, you know that. Nonprofit organization donation, that's another thing, right? You could take your money and donate to nonprofit, or you could set up a nonprofit of your own and donate money into the nonprofit. So as long as your nonprofit status can be approved by the government, right? R&D credit, this is a research and development credit, and it's really prevalent for the manufacturer companies or research companies, software companies. Those are spending a lot of time and effort to invent something, right? Cost segregation, useful for real estate companies, because your buildings that you bought, you can go through cost segregation to know what can be write down faster, what need to be depreciated over 39.5 years, right? Health insurance premium deduction, that's another thing. Small companies can deduct the premiums. So those are the things need to come into your company tax return form. And if you cannot deduct because you got more than 50 employees and your average payroll is over 50,000, so of course you can't do that premium deduction, but it is something that you can do at a different stage. So those are our tools. We think about that in totality. It's not like one thing will nail the coffin. We actually look at all your options and come up with a plan. So when you do tax planning with us, we give you a to-do list after the meeting. So out of that to-do list, if you say, I got it all done, then the tax result will be the one we tell you, because we actually calculate your tax for you and to tell you what is this before, what is after. Let's look at what Jim and Molly's after looks like. So with Jim and Molly, we set up a C corporation called BBB Inc. And this C corporation is fiscal year, start from November 1st, ends on October 30th. And then accrue-based, and the BBB Inc. is a service provider to the original AAA LLC, service provider. What does that mean? That means AAA will pay bill to BBB, am I right? Because as a service provider, they need to get paid, so AAA has expense from BBB. And we form S corporation called CCC, and is also a service provider to AAA. You may say that, well, what are all these service providers? Of course, you can have S corporation be the management company. You can have the C corporation be the flipping property kind of company. So there's so many ways that you can build these property. You can build these entities and with a purpose. Then you can run W-2 on your 1120S and apply for 1K employee deferral plus company match on it, right? You can also put in cash balance plan. That cash balance plan, ladies and gentlemen, that's expense for the company. And you can apply for owner's health insurance premium on W-2. So all of these things, these are the toolbox items we just pulled over right here, right? All right, so what other tax strategy they would have? We would tell Jim and Molly, purchase new equipment, vehicles, and nonprofit organization donations, R&D, cost segregation. These are all the things that from our toolbox. We will hear what they say, then we will start to plan how their tax would look like. So now, with this, so I want to give you a result with the tax planning. What is this looks like? So partnership AAA LLC has a profit of 4K, no longer 200-some thousand K. Okay, C Corp BBB has a profit of 58,000. S Corporation has a profit of 28,000. So out of this S Corporation, we did W-2 payroll, and we did a 401k, we did a health insurance premium deduction. So all of these things that we were saying to Jim and Molly that this is what we're gonna do. Let's see what is the result. Remember this map, right? This is prior to tax planning map. You got two boxes. The one on the right is 1040 box, and you can see in the number there, they're paying $58,000 on federal, $8,000 on state. You can see the red color, right? The red color represents the money they're gonna pay. So you can also see that the AAA has $240,000 profit. But let's look at what happened after we planned. After we planned, you see 4 boxes on the paper. There's a 2 on the left-hand side. There is 1 on the right-hand side. Right in the middle is Jim and Molly. So what Jim and Molly do now, and look at the right number. Right now, Jim, Molly pays $9,336 to federal tax. They're paying $3,709 to state taxes. So remember how much was they're paying? They were paying $58K plus $8K. So that's a $66K. So right now we're looking at what? About $12K? So we have some saving just for Molly and Jim on their personal side. So you can see that on the left-hand side, the AAA and also the CCC are pass-through entity. They go into 1040, already included in our $9,000 and the $3,000 tax payment. It's already covered. So now we're gonna look at the one on the right-hand side. That is a C corporation. Remember, C corporation doesn't pass through anything unless you do dividend distribution, right? So you issue 1099 dividend. But you're not doing that right now, and you're simply running the C Corp and paying taxes of $12,273 and the $3,214. So that's the taxes you need to pay for that corporation. And remember, our year is not the same year, right? You got the year, this C corporation doesn't need you to pay that $15,000 taxes until the tax is due. That would be almost 12 months after, because they begin their year on November. They end their year in October. So let's say we're doing 2024 tax planning. So the payment all goes into the C Corp. So they're all landing in the C Corp after their year began. So then that means they have a whole year to run their operation. Then they pay taxes at the end of 2025, right? But this one you have for 1040, you need to pay it before the year ends, so you don't pay any late payment or estimated tax payment penalty. So we will turn around, tell Jim that, hi, Jim and Molly, and you finish the tax planning with us, and your personal tax bill that you need to pay right now, it is the $12,000. And 12 months later, you have another bill to come to you that is for the C Corp. It's another $15,000. But even if you add them together, it is not $66,000. Am I right? So let's look at the summary. So you have we're doing this comparison for you. Before 1040 federal tax $58,416 plus state tax $8,226. So the total tax due is $66,642 right away before April 15 of 2025. Now, after the planning, before April 15, 2025, your tax due is $9,336 to federal, $3,709 to the state. Period. But after your 1120, your C corporation tax is due. So it starts from November, ends in October. So you take 4.5 months to file taxes. That's a March 15, 2026. Your $12,273 plus your $3,214 are due. So your total tax due after the planning becoming what? $28,532. So the tax difference is what? Not even talking about the delay, because your C Corp has such a big delay, you don't have to, it's not due for you. But just for the tax difference, that 38,110, that's the absolute total saving you have done with the tax planning that we just gone through for you. All right. I want to pause here because our toolbox is ever changing, right? It's not like, oh, this is the way to do everything. No, this is just an example we want to give you to show you that tax planning is so important. Tax planning is not something you can imagine in totality because there's so much to change. For example, on last Saturday, we talked about the tax court cases from January to June of 2024. So there are things got implemented as we speak, right? So with all of these moving target, and it helps us to know what is the right thing to do. So we have proper backup and understanding what is the real interpretation of that tax law, what is it trying to do, so you can apply that appropriately. So with that said, I want to say that I'm impressed. Every time we do a tax planning, I felt we had made such a good contribution to the growth of clients' business and also making sure they're in compliance with whatever the government is asking. To be in compliance, also save taxes, that got to be your goal. That's a combination you can get at Community CPA. All right, so last few slides, tax planning service. If you're interested in our 2024 tax planning service, you contact us. And on this slide, I showed you the branch's phone number. And I noticed that we didn't put in the other two branches because the screen was limited. We only photoshopped the first three. But you got your Des Moines, you got your Iowa City, Coralville, and Minnesota, Bloomington. So you got there. And you can always call our main number. That is the Des Moines original number. That's the number when we were born. That was the number we used. 515-288-3188. Of course, you know, sometimes you felt like, not sure about the planning, but I do have some really, really important question to ask before I can make decision. Then you can come to our website, go to the appointment button, and select one of the partners for to answer your question. So we have different language spoken, and the song speaks Spanish. So your tax, audit, accounting side of questions, issues, concerns, and the needs, and he's right there. And I myself, of course, I can help you. So all of us, other than myself and the Dr. Hao, and the rest of the partners, they have a 30 minutes free consultation. And if you book that 30 minutes, and you can ask them questions, get a feel, and then you obviously can book our time. And when you book my time, I do charge for 45 minutes, but those, I have not had anyone who said that 45 minutes is not worth it. Every single time, I make sure you got your answer before you leave me. All right? All right. Our last slide is about our YouTube channel. I want you to go ahead, subscribe to our channel, and let your friend know that, like today's webinar, like this particular one we're doing, it will be on the channel. So if you like it a lot and thinking is meaningful, then let your friend know and they can watch that video as well. And of course, you can email Catherine at communitycpa.com, and she is the one managing all the flows in terms of social media, what we talk next time, and she plans everything. And our office, I cannot stop bragging about that. We're the only CPA firm I can find on the internet open 6 days a week. And we're not slave drivers, so we're not saying that everybody needs to work 6 days a week. And we have teams Monday to Friday, Tuesday to Saturday, So we don't overwork. You know, if you make professional people overwork, our brain not gonna work. Okay, you need our brain to be so fresh and nice, so that when you ask questions, we're like popcorns can come up with answers, right? And I sometimes I find myself when I'm getting really tired, I speak Chinese. Does that make sense? You know, I found myself speaking Chinese. I'm like, I need a little break, maybe a nap or something. All right, good to see you, and I will see you again on Saturday. And I hope you know what tax planning now is all about. See you again. Bye-bye.